Hi everybody, Caroline Mathis. Well, it's that time of the month again and we're going to go over May's numbers. We broke a lot of records again, let's just put it that way and get into this. Median sales price rose, we're over $500,000 now. $502,000, $500,000 for a median sales price. Steady increase, and we kind of knew that was going to happen. Median sales price by months, the one on the left hand side shows a little blank spot. That was May 2020. The median sales price was $399,900. We've rose 25% in this year. Days to contract, 14 days. It's gone down just a little bit, and as we've always talked about, normally what happens if you're priced right, it's within 5 days. You'll get an accepted offer. Active inventory with new sales, we had a little drop with the number of new listings that have come on the market. It's in comparison to the past couple months. We sold 300 homes, or actually, beg your pardon, we sold 535 homes and have 300 homes on the market as of the end of May. Not a lot of homes. Inventory, we can see it's gone up just a little bit, 0.1%. So now we have probably about 18 days of inventory if no other homes would come on the market. Inventory by price range, you can pick your favorite price range. The $750,000 to $1 million, it rose about 10 homes. Quite interesting, I thought. Contracts by the month, 606 contracts, new contracts. This, when the screens change, you know, I've always told you that this is across the United States. So it's quite interesting. February, March, and April, we've seen just an uptick, even just a little bit, but we have seen an uptick go up with the amount of inventory, more inventory that we've had. We'll get right into the numbers. $550,000 is the median sales price for a home in the Reno area. Reno proper went up almost 10%. Sparks numbers dropped just a little bit, almost 1.5% down to 453,500. Days to contract, 12. This is our neighborhood to the east in Fernley. Their prices have now gone up as well, almost 7%. Days to contract, 8 days. They have active inventory of 37 homes in that neighborhood. We're going to head down to Carson City, our capital. Look at the jump that they went. Median sales price is $455,000. Almost 8.5% in price increase. That's a pretty significant jump in my opinion. Minden, Gardnerville, will go down a little bit further south. Median sales price, it rose another almost 6.5% to $560,000. 6 days to contract. This is a huge surprise to me. Almost 16% for townhomes. Median sales price is $315,000, amount that has gone up almost 16%. Crazy. We've talked about this, and a lot of my buyers are thinking I can't compete. Well, in Realty Track looked at the numbers as far as what kind of financing, and number one across the nation is our sweet town of Reno. These were sales in February and March of this year. I mean, there was a difference between Reno and Ranson. If you're from Wisconsin, you can tell me if I've pronounced that correctly or not. It's 40% of their buyers were cash. Ours is 51% of all of our sales were cash sales, February and March of this year. Housing affordability. This is a little bit of a crazy type of graph. It's across the United States. And what it is looking at, the orange, is when we were in the recession. The higher the number, the more likely a homeowner or a buyer can afford a house. So right there in the middle of the recession, they were looking at 197 of the people that were looking for homes could afford a home. But look at our graph. The graph that we have now, they're showing this past month, April, now it's saying 174% of the people could go and buy a house. And you know the reason why? It's because of those interest rates. Look at the years previous. 108, 126, 108 again right before the recession broke. Our interest rates were high. I remember the first house I bought, I thought I was all that in a bag of chips when my interest rates were 6.5%. Way back in the day when I first started doing real estate as far as on the service side, people were assuming loans with interest rates at 12% because the going rate was between 18 and 20%. Cross my heart, honest to God truth. This is an interesting, and this is kind of long, but I would like to look at it in detail and kind of read this over to you. First American is a well-known title company across the United States. Looking at the bubble years, house prices exceeded house buying power in 2006. We saw that graph. But today's house buying power is nearly twice as high as the median sales price nationally. Now, remind you, this is nationally, but it's interesting because what goes on nationally will reflect sooner or later our market, right? Many find it hard to believe, but housing is actually undervalued in most markets, and the gap between house buying power and the sales price indicates there's room for further house price growth in the months to come across the United States. It's very interesting. My suggestion to you with these interest rates, even though they have adjusted maybe 0.5%, they are unheard of interest rates. My opinion will probably have to go up sooner than later, but now is the time to be able to get into a home with an amazing interest rate. Percentage of median income needed. Back in 2006, they counted 25% of your income to be able to buy a house. Now they're considering about 14% would be all you need with those interest rates as low as they are to be able to buy a house. We can talk about this. I have some great lenders that I work with, and between the three of us, we can get some answers and make sure that you're in a home that you're comfortable with the house